Millions worth of tech calls hit the tape to end last week. A TSLA Insider loaded a bunch of calls before delivery date and is still holding for a much bigger move. Plus, Trump signs the big, beautiful bill, which will lead to more money flooding the markets. All that and much more in today's video. So make sure to subscribe below if you want to see more of these videos, and let's get started. Buying the dip has been printing money this year. If you just bought the NASDAQ every time it closed red, you'd be up around 32%. That's the best performance for this strategy in the last 5 years. It's even beating the crazy .com years like 98 and 99. Last year at this point, the same move only got you around 5%. And here's the kicker. The NASDAQ's been red on 51 of the 124 trading days so far this year. So if you've been buying every dip, it's basically been a gift. And to contrast that, this has actually been one of the worst years in history for the US dollar. The US dollar index fell 10.8% in the first half of 2025, which is the worst first half performance since the end of the Bretton Woods system in 1973. So very long time ago. This also marks the weakest performance for any 6-month period since 2009 during the Great Financial Crisis or thereafter. So incredible weakness from the dollar so far this year. Another thing to note as well, the S&P 500's recent new all-time high only had about 22 stocks hit their own all-time highs at the same time. And you can see how that compares to some previous times where we broke out to all-time highs after a while of not retesting all-time highs. And this rally very clearly is getting more and more narrow as time goes on. So it's really only driven by fewer and fewer names. So the overall market breadth is thinning out pretty hard, all things considered. And then also over here, we just had all these things happen in just the past week alone. Trump threatened to fire Powell. He called for a 100 basis point rate cut, asked if he could nominate himself as the Fed chair, which is kind of funny, and then called for a 250 basis point rate cut, sent a handwritten letter that said too late to Powell, as you can see over here, and then also called for interest rates to drop to 1%. So definitely still very active in the market. All of this news is going to lead to some more summer volatility. And as a result, let's check out the flow to see how we can benefit from this volatility. So we saw a lot, and I mean a lot, of call flow to end last week. This is from all of last week. It was only 4 days, of course, because 4th of July was Friday. But all of this over here is still Thursday. You can see millions upon millions of calls in Google and Apple. And also if we go over to the S&P 500, we saw a couple of those as well. And before I go into the significance of the dark pool prints, because there's actually quite a bit of dark pool prints that we saw on both of these tech names, just want to show you some of these prints. 1.5 million in premium for the 215 strike, that's out the money. 1.8 million also for the 215 strike, out the money. Over here, 8.8 million in premium. This one's in the money, but still this expired last week on July 3rd. So this was for the Thursday expiration. This is a ton of premium to be trading a 0-date expiration on. So insane there. As we scroll down, you can see some other ones. 6 million in premium for a put sell order. This one was sold to open because the volume and size of this print, 6,000, is over the existing open interest. Also came in below the bid for the December expiration. Still ridiculous amount of premium, especially for something like Google. And if we keep scrolling down, it just is still bullish across the board throughout the entire week. Just got even more bullish on Thursday, something like this 1.7 million premium for the 205 strike back when it was trading 206 on Apple. So a lot of bullish prints. You can see up here, 67% call flow to 33% put flow. And realistically, there weren't many large puts, like singular put orders that we saw. It really was just across the board, Apple and Google specifically, a lot of call prints. And we also saw that in Tesla, which I'll get into in a second as well. But what I want to show you is these charts because they look like they have continuation potential. As you can see here, Apple broke out of this pennant pattern. You can see the lower end here and then the upper end finally broke out last week. On Monday, we had that daily confirmation close above here, and it had continuation all 4 days to last week. So very clean breakout. The estimated target of something like this, at least in the near term, would be 225 because that is the upper edge of this pennant where it started. So up here, you can see this is where we start that pivot for the downtrend. So that is the estimated target in the near term. Afterwards, after it touches something like 225 up here, it can decide if it wants to do a mini pullback and form something like a Batman pattern higher. Batman pattern, by the way, this would be the wing over here. This would be the second wing. And then you also have the head. Ideally, it would be in the middle, but the pennant kind of got extended for quite a while. Also is a version of an inverse head and shoulder, probably what you guys are going to be more familiar with. But something like this can happen where it bounces higher, or it can just continue to melt a lot higher from there. So a couple variations, but both of them do end much higher. The exact target could be looking at something like mid 230s to 240 on Apple. So a very bullish breakout as long as it continues to hold this downtrend breakout area. So around 200, as well as this demand zone that I've had for a long time. It goes all the way back to when I had a difficult time breaking out above here. Remember this time, this consolidation for multiple months. As long as it stays above, it is very bullish. This is a very clean retest of previous demand and a very thick demand at that. So it can continue much higher from here. As for Google, we can go over here, kind of similar to what I'm looking at on Tesla, which again, I'll share in a second here. It is a clean uptrend that it's been holding for a while, since back here in October of 2023. If you remember that major market bottom, and you can see multiple times it was retested over here, and then we finally broke below it. Finally, we're able to reclaim it as of recently. So as long as it holds this trend line over here, this will continue to go much higher, similar to Apple above its downtrend, similar to something like Tesla, which again, I'll share in a second. But you can see there's a large clearing above this uptrend here. So the risk in this case is about 173, it breaking back below. As long as it can stay above 173, honestly, I think this can go back to 200, potential for maybe even a gap fill around 206. That's how bullish this could be. A lot of accumulation. This is your stereotypical accumulation on a chart over here when it had its initial flush out, a leg over here, and then consolidation afterwards, and then just consolidated up, finally reclaimed a certain level like this uptrend over here, and it's holding it well. Even with this retest right there, was able to bounce back up, holding it. You can see a very nice squeeze higher from here, just from a technical perspective. And also, it's not just the technicals that are bullish. Go back to the flow. This is super bullish, guys. This amount of flow that we saw, pretty rare for both Apple and Google to see continuous orders like this with, one, the amount of premium we saw, just a bunch of it. And then two, some of these are pretty aggressive, like out the money prints within the next couple months or so. So a lot of bullish factors for both Apple and Google, which of course is going to benefit the market overall. Now let's go check out some of Tesla's flow, because that was pretty interesting last week. So as you can see here, there was a very blatant insider trade on Tesla last week. You can see it's funny, this post, how to get rich with Tesla, buy short dated Tesla calls yesterday, and then lesson 2 had inside information on delivery numbers today. They very clearly knew what they were doing, because if we go to the flow, we can actually check out the flow from all of last week and go to Tesla over here and see some of those orders that came in before. And this is going to apply to this week as well, because a lot of these are still being held as to our knowledge so far. So there is that potential for continuation to this theme. But if we go scroll back to earlier on in the week, specific day, I believe was over here, we saw some of these calls. So a 7:01, that would be Tuesday, is when we started to see it, conveniently the day before the delivery data came out, funny enough. But over here, pretty far out to money calls on both of these. Like, it was trading at 300 at the time. They added the 350 strike for both of these, and this was 1.2 million in premium, so decent amount in premium in there. 1.6 million in premium over here for the 300 call. For 116, a bit more to the expiration. It's still a decent amount of premium. 3 million for the put sell order, and then this is when some of these started to fly in. 1.9 million for the 305 for 725. That is relatively short dated, and this most definitely paid that whale well. A 5.1 million put sell order, 2.2 million call, also relatively short dated, like within a month until it expires. You can see over here, this also was July 1st, Tuesday, again, the day before that delivery data came out. So very skewed to the calls, at least the call side on that day. Really only one put that was notable that we saw, this short dated put over here. But all things considered, very bullish positioning, and also continued to be bullish positioning for the rest of the week. You can see 1.4 million in premium for the 350 strike, pretty far out the money there, even for something like Tesla. Just across the board has been relatively bullish. Now, if we go to the chart, there's two things I want to bring your attention to. One, obviously over here, this is where we were trading. I'll circle it so you can see this is where we were trading when they were loading up all those calls. And then the delivery data came in, which, by the way, wasn't even positive, but I guess the market priced it in and kind of knew that. So there was a nice spike much higher during the day and the consolidation after. So that in itself, impressive move by them. And they're still holding based on the OI. We'll see that come Monday's open. Now, the second thing I want to mention, and the reason I said this is similar to Google's chart, is because on the daily, very similar to what I've shared in the past at least, but it's getting more prevalent now. You can see this uptrend right here, this blue line, just follow it, the one that goes all the way back to April 2024, so a bit over a year ago. This is getting retested or almost retested on the daily. Very similar to Google, Tesla needs to reclaim this level, this trend line over here, in order to have potential to squeeze much higher afterwards. Until it can reclaim this uptrend, similar to what it did back here, it's able to reclaim it within a couple days and then it squeezed much higher. Until it can do that, there is risk of it consolidating under here or even just a flush much lower to like 272, since that's a prevalent level that I have. So it's very critical that bulls are able to get it back above this trend line. If they can do so, then we're going to see much higher. Personally, I think this can go to 400 this year, guys. Sounds crazy, but if we can get back above, it's actually able to stabilize. We hit my first target, 339.69, can hold above it. This is something that can go much higher. Of course, the news with Elon and Trump is not helping by any means. Elon just created his own American party as well. I'm not sure if you guys saw that news. So a lot of factors there. So I'm not in a position yet, but if we can reclaim and on confirmation, reclaim this trend line over here, looking for something like an hourly to daily close above, roughly 322 at the moment. Above that, this thing can squeeze really hard. I'm interested in trading that. I'll be watching this week for that, as well as some of those other setups like Apple and Google. Regardless, as always, appreciate you guys watching this video. I'll see you next time.